Welcome everyone to the Kendall Report, where I share my 44 years of experience to help you manage your portfolios and protect your wealth. Make sure you subscribe, like, and share these videos. Well, finally getting some growth in the channel again, folks. So before I get into tonight's video, thanks. There's over 500 of you that have subscribed. That's awesome. Keep telling your friends. Let's start to get this. This is a new highs for the channel for followers. So thank you, and make sure you hit that like. So in tonight's video, I'm going to be going through some quite a few things. We have Powell speaking tomorrow. I kind of spaced that out. Didn't really talk about it yesterday. We did talk about the Fed, but Powell will be testifying in front of Congress tomorrow, and then there's a House presentation, I believe, on the 8th. So we got plenty of Fed speak coming at us, and typically that generates some volatility. If you remember in previous videos, I was talking to you about the possibility of seeing a rollover starting Wednesday. Well, we started it today. So we're also going to cover all the EV companies tonight. So I've got a lot to say about that as well. So let's get into tonight's video. Well, hopefully, let me know. Last night my mic was a little hot. I had a issue, so make sure you comment. I'll glance over here in a minute and make sure that the mic isn't too hot and kind of blasting like it was last night. I had to switch back to an analog mixer because of Windows 11, my favorite OS ever. Not really. Okay, so let's get into tonight's video. Let's start off with Powell. I think that's fairly important to talk about, and he's going to. This is what everybody's expecting, and I think they'll probably be right as far as that goes. What we're looking at is that he's going to be keeping the dialogue that inflation's not beat. They're going to keep rates higher for longer. We talked about this yesterday, and what that really means is we're kind of locking things down at these levels. And I've been talking about in the commentary in the Substack newsletter, I went through some detail last night, talking about how it looks like interest rates could drop back under 4% on the 10-year, which would be interesting to say the least. We'll see what comes out of tomorrow's testimony, and I think it'll create a lot of volatility. I don't expect him to say anything unusual, but as you know, every word that he says will be parsed and reacted to. So the algos are going to be pretty active, I believe, tomorrow from that standpoint. The other thing I mentioned to you, I think, over the course of time, that I was watching Bloomberg several weeks ago, and the CEO of CrowdStrike came on, and he was talking about these productivity gains they're making, where they took jobs from that used to take 8 hours down to 10 minutes. Well, guess what? They came out with earnings. They jumped 20%. They just beat knocked the wrapper off the ball, and it's just huge earnings. And I'm telling you, not just the data companies, we're going to continue to see this kind of productivity gain. So I'm stuck on this theme. Markets are going to have to show me I'm wrong. Right now, I believe I'm right, and that's where we're at from there. So last night I was talking a lot about the banks, right? And the banks rebounded big time. I think, we'll take a quick glance back at those. I'll go through some of the details. Well, I can do it right now. So KRE up 4%, 399. QABA, which is the community banks, up 3.8. And KBE up 3.72. If you recall from last night, the two strongest were the community banks and the larger banks, but we saw a big rebound even in the regional banks. So, like I said, be careful about trying to buy into some of this banking crisis crud that's running around the markets. It's going to get you in trouble, get you on the wrong side of the markets. In last night's Substack, I went through a number of details that I just want to point out as I was talking about market potentially going down to around the 50-90 level, and the potential of going down to the 21, and the number was right down around 40, 50. Well, we printed, I'm sorry, 40, 50, 50, 60. We printed to that today, and we saw a massive short covering in the last hour. So we saw around all the way back to 40, 90. Sorry, you got vehicles out front. So right back to the 50-90 level, and this whole scenario that keeps happening, we get down to this mid-50s. If you remember, if we go back maybe 4 weeks ago, we saw this same type of action around 49, 60. It's interesting, these numbers keep rotating around. So I'm actually going to go through some of that scenario. I'll go through that analysis here shortly, and we'll cover that. I'm still telling you, you got to get the Substack, because you would have had all the numbers. There were some pretty good numbers to watch for where the pivots were in last night's edition. So definitely take a look at that. So it was interesting, the consumer market is still looking better. Like Target was up 12%. We saw some of the retail numbers really coming in good. So those folks that are talking about recessions and those type of things is just not coming to fruition at all. It's a very interesting scenario we have in the economy. There's a lot of mixed type numbers, but it's always like that. I can't remember a time where certain sectors weren't doing better than others, and there was a rotation going on, and all this noise that we hear around the markets, that's always the case. And so you have to make sure you have a good filter on those ideas. And so what's looking like, and I'll go through the analysis on the S&P tonight. Actually, we'll do S&P and NASDAQ, and then when I'm done with that, we're going to go through all of them, Tesla, Fisker, right down the road. Okay, we're going to go through those, and I'm going to have some comments. I've been pushing some comments out there saying I'm going to do this. I wanted to do a nice produced video, but as life goes on, we're just going to do it today. And so I'll make sure that there's a note somewhere in the description that we covered this tonight. So make sure that goes on. So I'm taking no comments on the mic. It's fine. So that's a good thing. It's loud enough, all that stuff. So I'll leave it alone. So let's go on and just talk. I want to set up a couple things here, and then we'll go and follow through with the markets, and then go into the EV stuff. And I just want to, what I'll do is I'll come through this. We'll do markets. I'll come back on screen. I'll set up the EV section, and then we'll probably end the broadcast. We'll see how we get down the trail. So let's go ahead. Let's take a quick look at the S&P here. So this is the daily, and this is somewhat interesting, because if you recall, those of you that have the Substack newsletter, you'll know that I talked about a pattern that's been unfolding for, I don't know, most of this year, actually. And what it's been is we get two red bars, we'll say 2 days down, and then we get a reversal. And last night I said today should have been the day down, which would satisfy that. And it's interesting, although we're not getting we got new Fibonacci targets to the upside. We got the two red bars, and see if I can blow this up and point these out a little bit here. See if I can, you can see over here, here's two market rallies. This is on and off. There's a couple here where we saw the rally. There were 3 or 4, but we're seeing this stair-stepping up the angle of attack here on these moving averages. The only difference now we're seeing, if you look down here at the algorithms, they are starting to suggest that we're going to see a potential of getting into a negative downtrend, or starting to see an actual trend mode to the downside, which I think will be it is starting to look like it's more possible than I thought maybe a few days ago. And so we're seeing, I'll go to the weekly chart here in a minute, but what I'm seeing here is the algos are starting to project down. There's going to be a key number. 5054 is the 21-day moving average. Let me blow this up so we can see it just a bit better here. You see a couple of things. We have these 3 new Fibonacci targets to the upside. Those numbers are 5224, 5287, 5326. That's up here. But as I've told you, those of you that have the indicators, what you want to look at is what are the PPMs telling you that there's a possible uptrend? And right now they're not. So this may be one of what I call an island. Let me draw something in here just so make sure we're all looking at the same page here. So let's take a look. Yeah, I don't know if you guys are hearing that. I don't know why guys in Harleys have to rev their engines as they come up to the stop sign. Here we go. So these are right here. I put an arrow on the island. This is what I call an island projection. We'll find out if this goes away on after Wednesday's action, then we'll get another island. These happen, but these indicators and all the algos are suggesting that we're going to see downside or weakness come in. We're going to see the angle of attack to the downside to actually looking at, some downward pressure here on a short-term basis. As I said, I'm going to go to the all right, things are flickering here. I'm going to go to the actual weekly chart as well just to confirm this stuff. But you can see what I'm talking about. So we do have this upward projection. Let me close this out so we can go forward. So let's go to the weekly. It's interesting because right now we have the potential on a weekly basis. And I think if those of you that are reading the Substack newsletter, by the way, you can just go to kendallreport.com/newsletter and get signed up there. There's a 7-day trial on that. But what I've been talking about is that I thought we would stay positive into the first week of March. I've been talking about this for a couple weeks now. Now we get in here, we saw we're actually came just short of rendering a new high, and now we're starting to see where we're challenging last week's low right now, which is at the 50-60 level. Today we went to 63, so we're right at it. The high's been 57. Last week's high was 49, so we did render an all-time new high on this current bar. So if we do take out that 60 number, then that's going to set us up for a potential reversal pattern. It's also going to set us up for potential, would be a 3-week trade here. So that could happen as well. So we could literally start to see a test of the 10, and ultimately you can see the algos even on the weekly are starting to come down. So I'll try to emphasize this in the newsletter tonight, and when I write that a little later. Let's go ahead and just look at the NASDAQ real quick. All right, so NASDAQ futures, same kind of pattern with the exception. I'm just looking at the numbers here. Yeah, so we did get a higher high there as well. The low was last week 17,826, and we're 17,822. So we have an outside bar working on the NASDAQ, and that has been really always been the leader since this whole rally started, going back to, with the Magnificent Seven. And it's interesting because we're seeing a lot of the selling coming into the Microsofts and the Amazons and sections of that Magnificent Seven is exactly where things are starting to play out. So, but we still have a pretty good slope, even though this thing's turning down. We still have PPM value of 0.53. There's actually less than about a 30% probability that we close through the 10-period moving average, 17,620. Like I said, these are all facts that will be I'll lay out and walk forward in the nightly newsletter. So make sure you get signed up for that. But yeah, so nothing really new, but we do have the big element that we have coming in here is really the whole Powell situation coming in. So I'll come back on screen here and let's talk about a couple things. From the standpoint of the indices, I think we are getting close to at least a consolidation phase. I'm still looking at a lot of upward, especially on the intermediate trends. We still have a very robust database, all those things that are in play. And like I said, I cover the database every night in the newsletter as well. Plus I put the numbers out and all that. The market grid, a whole bunch of stuff is in there. So let's talk about one of the main features for tonight's video that I think is going to get very interesting. Folks have known for a while, I'm not a big fan of EVs. I think they're an alternative for some people, but they're not really very practical yet. And I posted on a Twitter post, I think it was maybe a couple of weeks ago, is that the real solution is probably Toyota's got the right idea, and not a hydrogen car that charges a battery, but just a hydrogen piston engine. That's probably where things are going to end up going, I think, eventually, because it's much more, there's not any more infrastructure, there's less infrastructure right now than for the electric cars, but in the end, it will, I think, be much easier to facilitate. The problem with electric cars, especially electric trucks, ask Ford, they can't sell their trucks they're making. That is going to continue to be a big issue. You can't go out and go off-roading in an electric truck. You're going to go half as far as you want to go, and you're going to have to return back, or you're going to have a diesel charger or gas generator with you to be able to recharge. So kind of redundant, ridiculous actually. So here's a couple things. I want to set this up, and I'm going to show you. I tell you folks all the time, do reverse fundamentals, right? The reverse fundamentals are telling us that nobody really wants the EVs. They're being forced down our throats by especially the current administration. They're trying to put infrastructure in place, but there's not enough electricity. There's not enough anything. I would tell you, once you get out of, like, if you're in Scottsdale, Arizona, there's Teslas and electric cars everywhere. And I tell everybody for a very long time is that Phoenix is one of the most green cities on the planet. We have hydro and nuclear power here, the whole state. I don't think we have one, as far as I know, there's no gas-fired or coal-fired anything to make energy. We get electricity from Hoover Dam, we got the Roosevelt Dam, and we've got a giant nuclear reactor out of Phoenix. So good place to own electric car here, and if you're around town, it works. Once you get further out of Phoenix, the sightings of Teslas and electric cars get less and less because the infrastructure is not in place like there is in the cities. And so what we're seeing, and I'm going to go through some of these charts, and I've been telling everybody, somebody questioned me, did you really say that Tesla's going to $10? And I think there's a lot of issues. I'm not going to get super deep into the stock, but I do want to spend a few minutes talking about it. I think there's a lot of issues with Tesla. I have had the opportunity to spend weeks. When I was in Europe, summer before last, I cruised around in a Tesla. It was a nice car. We had to go to several charging stations during our time and hang out. Usually there was some things to do around the charging station, so that was fine. And I was a tourist anyway, so that was just fine. But the reality is that the cars themselves, and anybody that's owned like luxury cars or nice cars, they're really not very nice cars. I always say they're basically a basic car with a computer screen in it. And they have functionalities, the autonomous driving, all that stuff's wonderful. The problem with that all of these cars is that, A, no one wants them. I know I'm going to get a lot of trolls on this one. The Tesla fan folks are going to come out big time. But they're just not that functional. And so what we're seeing in the prices is exactly that. I'm going to go through Tesla, Fisker, even take a look at Ford. Ford's trying to get out of the business. They're shutting down factories. None of the dealers want the, Ford electric trucks. I forget they had a name for them, Lightning or something like that. We'll go through Ride, Rivian. We're going to go through a bunch of these stocks. And basically, the only stock that hasn't been priced for failure right now is Tesla, okay? Everybody was telling me, I predicted in the newsletter, I did a special edition on Tesla. Said when we were around 200, said we're going to $180. We're back at $181. And I'm going to show you some numbers. And I think there's some reality in here. And it was interesting because I think might have been Rivian or Fisker. I will show you all these charts. We're going to go through them one by one. And when I get done with this, I'll come back up and maybe we can do some interacting. I'll answer some questions or something. And you Tesla fans can come after me as much as you want. It's the price. When I see, I'm going to show you a chart here in a minute, which is the death pattern, okay? And it is the death pattern. I think I've told some of you folks in the past, way back in the history of my life in this market, is I've been involved with a number of OTC stocks. I've been on ground floor of new offerings. I've done all these things, and these stocks all trade the same. They get hyped, and then ultimately they get sold down to zero, and then every bounce after that looks like that. I would have loved to do a produced video because Kathy Wood was just on a podcast somewhere talking about the doing air quotes $2,000 target for Tesla. Good luck with that. And there's just a lot of issues. Elon's part of the problem, not from his mind, but from his wallet. His financing is presenting an awful lot of risk to Tesla owners, stock owners. And if certain things happen, everybody's going to run through the same door. It'd be like being in a theater and there's one back door and somebody yelled fire. So let's get into some stocks. Enough of me talking about that. And I see somebody's comment. The Tesla is crap. I call them POSs. I mean, I've owned a lot of nice cars, and that's not. I don't own a Tesla, but I've been in it. Those aren't nice cars. So there's actually aftermarket people that will go in. You know what? I'm going to say this right now. You know what Elon should have done? He should not have bought Twitter. He should have bought Mercedes-Benz. He could have wrote a check and bought Mercedes-Benz. And between those two, there might have been like a really, really nice Tesla to come out. And and the Roadster's not going to go 0 to 60 in 1 second. I saw some people disputing the actual physics of that event happening. Anyway, so let's get into some charts, talk about it. I'm going to come back on. I'd love to kind of interact with that. I do think there's other aspects that maybe get spun off. I see somebody talking robotics, and they've got some great technology. It's really not about the car or the technology or what they're doing. It's just the fact that they're not going to get much more traction from this thing, because if they didn't have the tax benefits and all of the things they had, they wouldn't have sold 3 of those cars. Okay, so let's get into the charts. I think that'll tell you a lot there. All right, I think I'll start off right where we were at there. Let's go straight to Tesla. And, you know, the other night, I guess last night, I went through some of the long-term stuff on long-term outlook for gold and silver. I'm going to do the same thing here when we go to monthly. And it's interesting what's happening here. And you'll see this on other charts I'm going to show you here. Fisker, I believe, Ride, Rivian, you're going to see all this stuff come in there. So this pattern, if you went to, I really wish I had more time in life to produce videos that could be really cool. I wish I had a partner that would help work on and research some of this stuff. It would be awesome. But I'm going to throw out these ideas. You'll see some Fibonacci targets here, and everybody's going to laugh when I show you this. And this was the same thing. All I can tell you, this is the same thing. If you went through all the meme stocks of 21, 22, you would have seen this same pattern on every one of them. I want you to see these Fibonacci targets on the downside. This is just, you're going to laugh, okay? I'm going to bring them up on the side. So the first target is minus $13. That's right, sub-zero. The second one is minus 132, and the third one is minus 206. Obviously, it can't go there. It can only go to zero. So what happens with this pattern, and this is what I've seen time after time. Here is what I call the hype phase, and now you get the distribution. I was talking about the difference between consolidation and distribution. This is massive distribution of shares is going on here. I'm sure this latest little move down, this is a monthly chart we have, it looks to me that eventually we're just going to see this thing just roll down to the level where Elon has to sell stocks. I was trying to find that out. If anybody knows that number and you're watching this video right now, just go ahead and comment if you know. I think it's something like sub 100 or $90 a share, some of the loans that Elon has, and that is going to be called in. He's going to have to sell stock. And if we get close to that number, everybody's going to try to front run him, which is going to cause just a complete calamity. Now, I'm not really big on, a lot of times, I'm not big on the actual hyping of a disaster like this, but it's just been eating at me for months and months, actually. So I wanted to go through some of this and just talk about what some of the elements are. I think last night I went off on a lot of things that were, that a lot of the hype and this noise that's around the markets all the time always have made me crazy. Listen, I'm an old man. I've been around a long time. I've seen a lot of stuff, and I've seen all kinds of hype, everything from an OTC stock to the, you name it, okay? And I just did something really naughty by accident. Touchscreens are awesome until you touch them. I just did something that is not, okay, good, I got it back. So this chart is exactly what's going on. By the way, Lehman, Bank of America, this was, those of you that have known me for a long time, you remember back in the day when I was talking about how all the banks were in a death pattern. I got trolled not at the levels that we have now, but I've been told over and over by lots of people I was wrong back in the '08 crisis, and you don't understand, everything's gonna be fine, they're bailing it out, and it's just didn't work out that way. Matter of fact, the worst of the worst was after the bailout was announced, which was after Lehman, around Lehman failure, and things just got worse. And all of these death patterns, I had somebody argue with me that they were going, Bob, you're telling me that a 150-year-old investment bank is going to go out of business. I go, yeah, I just said that, and that's what's going to happen. Of course, that is what happened. These patterns, it's interesting. When you've been around, and I've got this pattern recognition thing that's always been built into when I see certain things, even on intraday trading. Those of you hung around any of my live trading rooms and stuff like that in the past. I just have this intuitiveness that happens here. So let's look at this this pattern. Even if we start to break it down a little bit, the weeklies, I don't think this is about to happen this very moment, but if we print through the 180 level where we're at now, we do have Fibonacci targets even on the weeklies for 147, 127, which basically is talking about retesting that December 22 low. That is what is that the right number? Let me just before I stick my foot in it. Yeah, that would be that low there back in that day. And, you know, I see somebody saying, poor Kathy Wood's customers. If they haven't figured it out by now, you know, what can you say? You know, by the way, and I'm trying not to be like this terrible troll person tonight, but I do want to. I'm going to come back up for a second. Anybody that has, okay, this is an opinion, okay. If you are telling me that you know what's going to happen 5 years from now, when I went through the long-term forecast the other day, those are things that are being forecasted. We got a long ways to get actually authenticated or validated that those things are going to happen. The way I look at it, I don't care if it's a weekly, this pattern I just talked about in Tesla, I don't care what it is. As we go down the trail, we're going to find markers that go, oh, this is the event that we thought we were going to break through this price, momentum, PPMs, all these things we're going to line up to tell us that the next step that we're going down. And that's an important factor. And that's why on the indicators that a lot of you have, those are why I'm trying to get you to understand what those things are telling you and the forecasting as well as the current values of these things. And so when we look at this chart that I have on the screen now, what we're seeing is the algorithms say the weekly is going to try to bounce out of here. I think it's just really locking us into a range. And I talked about this. We may be stuck in this 180, 200, 210 range. And then down the road, it starts to roll over. But having said that, what's really going to be important is that we get, if we break through these numbers, and we could see an acceleration, and then everything gets updated because now we're triggering those numbers and start to go on. So what I was going to say is anybody like Kathy Wood, this is her favorite thing. Tesla's going to 2,000, but remember, we have a 5-year outlook. So these are prices for the next 5 years, so you can't go out and people like that say those things. I'm not going to call her a fraudster, but she's hyping, and she knows she can't be held accountable for anything she says because she's actually saying, well, you know, this isn't today. This is 5 years from now. And of course, if you remember 3 years ago, she was telling us that ARK-K would be doubled by now, I think. And why the SEC hasn't shut them down, I have no idea. It's frustrating for a guy like me who's been involved in running, I've been in hedge funds, been in all kinds of environments, to see somebody get away with this kind of crud. All right, I'm done. I'm off my soapbox. Sorry about that. Thanks for listening. Yeah, funny, Bob and Kathy. Listen, I'm not trying, it's just calling out some of the obvious stuff, as they say, saying the quiet part out loud. But let's go back to the chart here. So let's go through some of these other symbols so we can get through this. Not too bad. I'm only 34 minutes in on that little thing. So let's keep on monthly. I'm going to show you these. When I looked through this earlier, getting ready for tonight, I was almost belly laughing at some of these things. Let's put up Fisker. Look at this thing. This is the hype phase I was talking about in early. Let's stretch it out. So this was the hype phase way back in 21. These are the meme stocks, and they all end up I want you to see back here when the stock was trading $13, the Fibonacci target here. Look at this. Fibonacci target on Tuesday, March 22, March 1st, 2022, so almost exactly 2 years ago, we had a projection of $1.40. And current price, 41 cents, okay? That seemed ridiculous. And look at this, here's the negative projections as well, just like $7.14, $12.41. Obviously what that's saying, if we clicked on any of these earnings and all this stuff, we would do this. Let's go to the next one. Let's throw Ford in there. The good news for Ford, they're still making hydrocarbon cars, so they're in pretty good shape. But look at this. This was the hype going back in 22 on the big electric deal. Everybody bought into that, and then wait a minute. So no one wants the no one wants the things. Here we are. We're consolidating. Only thing saving Ford right now is they actually make hydrocarbon cars, right? So they make gas vehicles. I don't like calling it fossil fuels because they're not fossil fuels. So that's maybe for another rant, another time. But anyway, so Ford got some stability on here. It's basically took this hype out of here, and we're right back to where we were if we went back into 2018, and valuations were kind of back at that point in time. Yeah, I'm going to hit Lucid. We're going there, man. So just hang in here. So let's go to I'm just trying to get the is it ride? I don't think I have the right symbol here. All right, let's get to the next one. Let's go to Rivian. This one's a beauty. Look at this, straight to zero. That's they come out the big offering 21. They couldn't even hype it when everybody was going on, and now it's down to nothing. So, yeah, if you folks know some other companies, put them in the line here, and I'll discuss them. We'll go through any of this stuff. I think this is fascinating because this has been hyped up by the we'll call it the Green Party and all this stuff. All of a sudden, we're seeing something else. Municipalities do not want to build these facilities in their areas. They don't want to. They just don't want to participate. It's too much money. I wish I could come off the top of my head of somebody I saw talking about this, but the reality is that it is really, really expensive, and it's going to cost too much. Okay, we're going to go there with. Is that right? BYD. That's Boyd Gaming. So we want to stick with just EVs. I have another one here. I have not looked at this. I think it's this one here, maybe. I think this is one of the Japanese players. Hype to zero. It's just all of these companies are really in deep trouble, and there's no way out, folks. When you start to, all right, I'm going to come back on screen here because that's enough for the moment of this stuff. So when you see a crash in a stock like this, the ability to come back from these things are almost impossible. And I've seen all types of stuff. The next phase is you start to do reverse splits. You start to go into trying to do secondary offerings and get more money, and in the end, it just doesn't work. These companies are dead. And I have on my TradingView app on my phone, I have back in the days of the meme stocks, I have in the login, I have something that is called, I call it my red list. And the red list was back in the, I'm just seeing if I can bring this up pretty quick here, and I'll read you off some of these names. Yeah, it's a red list. But just all these like Grow Generation, Art K's in there actually on my red list. We're looking at, this one's bounced a little bit, GLBE. We're looking at, I'm just trying to find, my favorite, although it's actually a real company, I had Plantar as one of the most risky companies back in the day in 2022. I thought it was going to maybe 11 or 12, and it did do that. Now it's bounced back to 23. Some of these companies are just in the dirt. I'm just looking at some of these things, and it's crazy. And yeah, I'm just looking here at like Fubo. I mean, all of these companies, I'm bringing up a chart here. I mean, these things have just imploded, and they're not coming back. And I remember there was a guy on that I was watching, I was following on Twitter, and I made some comments. So I ended up getting blocked because it was just ridiculous what kind of garbage was coming out of this guy's fingertips and what he was promoting to his millennial crowd. It was really, really bad stuff. And I tried to warn them back in 22. I said, you realize when these companies collapse, there is no way out. And if anything, they sell maybe their technology, somebody revives it down the road. But it's just, listen, I lived through the .com deal. I could bring up a portfolio in our WaveTech that I kept in there. One of my very first customers, we did in 1999, did 179% return, and it was basically the Yahoos and the AOLs and all those .coms. Well, our system kicked out of them in very early 2000, and in the first quarter of 2000, we just got out of all those things. But it's just reminiscent. You could go down list after list after list of these stocks. Once they collapse to a certain phase, they just disappear. You look at AOL as one of the biggest companies back in those days, and now it's just it's still around. I forget who bought it, but it's just like a name. So anyway, yeah, I saw that FF. That's pretty funny. I'm just looking at some comments here real quick. Yeah, let me just see something. I'm trying to look through the timeline and focus here. Yeah, Plug Power, that's another one. Let me go over there real quick. Yeah, look at this, another one. Hype Phase 2021, reality. This thing just collapsed. And so I think I made my point. I've been wanting to at least get this stuff out here. Hang on one second. I got ambulances going by. All right, that was quite exciting. Thanks. Yeah, so these are the things that I want to talk about. I just think there's still a lot of risk. I know there's a lot of folks that love Tesla. They kind of buy into Kathy Woods. They talk about the innovation, and they talk about all these magical things that are going to happen. And, sometimes, and this is why I keep promoting on this channel, this reverse fundamentals. You got to ask the hard questions, and that's how you stay out of trouble. And when you see projections like what we're talking about, like in last night's, looking at some of these big longer-term outlooks, whether it's gold, silver, the S&P, all those things. If you read my 2024 outlook that I published in, I think it was December 29th, if you look at that, my whole hypothesis, which I have not been invalidated, is I see the S&P going to 6,100, maybe even more. And how's it going to get there? The only way we can get there is companies have to become way more efficient. Is there anything out there that can make that happen? Yes. AI. Are there companies embracing this? Yes. The CloudStrike guys proved that today, and it's beginning for people like them. But it's also going to carry through. And I really have been working. I've been telling you folks that I've been working on a project trying to find. I think the mid-cap stocks are still a better play for some of this AI stuff. It's not just always pure AI. It's not just NVIDIA and all the stuff that we know, and Microsoft and all those guys, not those players. There's going to be a subset that I think the real money's going to be made at, where all of a sudden you're going to get 3 and 4 baggers, meaning that these stocks are going to go, up 300, 400%, and some of these. And I've been doing a lot of research. I'm kind of frustrated with this year. I find myself in March, and I still don't have my favorite ETF hack or some kind of hack that is going to go forward. In the last 3 years, I've been really successful with that strategy. But this one is really tricky because it's kind of hard to come into these indexes and some of these stocks and trying to find you don't find these things just by finding stocks that haven't worked and you're trying to buy cheap. A lot of market players that do that, where you're not going to buy NVIDIA. Let's find somebody like NVIDIA and try to buy it. I talked about that just the other day, that these are not good ways to play these things. Like these guys trying to justify buying, AMSL or something like that at these crazy lofty areas, right? And they're supposedly, I'm doing air quotes, money managers, and they're buying. Well, we're just buying. It's a small position, so we can add to it. Where you been? Okay, that's what I would say. Where you been? Why didn't you see this coming? This has been one of the more obvious trades out there, and so. There should be the best way. I see Tony's got a question here. Does anyone know ETF without banks? And the best way to do that, and I'm going to be showing you in the next couple of weeks, is you get WaveTech and you build your own ETF. You can actually build your own ETF there. And it will manage, it tells you how much to buy and sell and everything. It's not a lot of effort, and you don't need a ton of stocks in it, somewhere between 15 and 25 stocks. And you put it on a weekly mode, and it just tells you, it's like, I call it's karaoke for the markets, right? And it's $100 a month, $97, I think, $380 a day. And we're working on a project that's just it's gonna blow everybody's mind when we get done. So, but there's a lot of ways you don't have to find it, you can build it. And I've been telling you folks, I'm going to show you how to manage your portfolios and protect your wealth. I'm going to be doing that. We're just, like I said, this channel's pivoted. We did do some market analysis tonight, but I really want to develop a voice here of reason in the markets. I've been knowing that for a very long time. I don't get hyped up. I don't get really excited, but I don't miss a lot of moves either. Our database is like 85% long right now, intermediate. Even with a little bit of selling today, we're not far off the highs. This thing, we saw just in the last 2 weeks, we've seen the markets pull back, and by the end of the week, we're printing ATHs on all of these things. And so there's still a lot of power behind this market. There's still a lot of money out there, and there's a lot of things going on. But I think tomorrow, just to kind of summarize here, we'll probably bail out here in just a few minutes. I'll look at some comments, but Paul is usually pretty good at keeping the markets kind of thinking and positive. And I don't, like I said, I don't think that he's going to say anything that is really earth-shocking, and he's not going to leave the main dialogue. It's still going to be about inflation. We're not there yet, all that stuff, even though we're seeing the PCE numbers and things coming in really to a large extent of where they say they want to be. But this is just going to be an ongoing dialogue. And I mentioned then last night, I think they possibly drop a quarter point maybe in June, mainly because these numbers have come in and we need to normalize the yield curve now. It's still inverted too much. I don't think it's really means much. That's the other thing I've been saying since it's been inverted for a year and a half plus. That's not going to generate a recession. And there's still people out there talking about recession, and what we're seeing in the economy is a complete rotation and still strong numbers. We get jobs numbers in a few days. So I don't expect any massive change. Everything's just going to continue to kind of go down the road. Doesn't mean we can't have a correction somewhere, maybe here, but nothing's going to be, in my opinion, material. And something I've been really hard, steady on from the standpoint of in the Substack letter, when I'm talking about the database, I've been putting out some charts on a sector-by-sector basis. I continue to think that the markets are going to stay reasonably positive, at least into July. Maybe we get into the sell in May and go away. Maybe there's some bumps in there as we get through this month and April. Maybe that happens. But for the most part, everything's likely to stay positive. The one thing that the WaveTech database is really good at, and I told you last year in January that the forward-looking was carrying us into late between August and October. We actually saw it roll over in that period of time, then a refresh, and then we see this new rally. And I think this is going to be a pretty unique year as we go through, is probably seeing back-to-back pretty decent years. Last year was an amazing return year. And the funny thing about that is a lot of, I'm going to put so-called money managers, advisory firms and people like that just flat out missed this thing last year. And I can tell you, having been in the business a long time and actually working with advisors for a long time, you can't afford to miss a good year when it comes. That's kind of what you sell yourself on, that, especially the pie chart folks and the allocation folks. And they held back. They weren't willing to make a bet. And they were worried about the upcoming recession that never came. It was the most advertised recession never to happen, and it's still kind of out there. So anyway, folks, I think that's it. Kind of a night of just kind of rolling through things. I appreciate everybody. Yeah, I see somebody posted recession news. Yeah, I'll have to click on that link. I'll take a look at that. But yeah, so we're just going to see more of the same. I just kind of wanted to go off on this EV, but it's not just EV, folks. There's some element of some of this stuff hanging around the AI section too. So we'll pick on those guys another day. Okay, this is. I've thought long and hard. I was out of YouTube for the last several months, and a lot of personal things going on that I needed to attend to. And, I thought about how do I want to come back to this channel? And I really trying to give you folks a really good, solid understanding. So we'll just go through these sectors by sectors as we go through the next several weeks and just kind of challenge some of the narrative that's out there. Like I said, maybe I can find some clips that I can play, and then we can react to them as well, because there's just a whole lot of people. One of the easiest things you'll ever do is just finding these people that are never right and fade them. They're the best indicator out there. We know the Jim Cramer reverse trade, but there's more than Jim Cramer. There's a whole lot of Jim Cramers out there, folks. And I kind of pride myself, not that I haven't had my own situations. I remember I think it was the 2020 election week, I got hammered pretty good. Basically just had it backwards. Sometimes that happens. Doesn't happen very often. But yeah, the markets definitely responded differently than I thought they would. And, so those things happen. That's part of being involved in the markets. As I always tell everybody, that being involved in the markets are really the art of understanding probabilities, and no one gets to predict the future, but a lot of times the probabilities are quite clear. So anyway, folks, thanks for watching. I really appreciate everything. And yeah, I'm just looking at some comments before I bolt here. Yeah, we had, Bo, we covered that KRE thing right up front. But yeah, so all of the banks responded. The end of the world is not coming. And like I said, there's just a lot of, I still think, as crazy as things are in this country, if you're watching from elsewhere, hopefully you have more sanity than there is in the United States right now. I've been around a long time, haven't ever seen anything like this, even going back to Vietnam days and protests and all kinds of crazy things. I've seen it all, okay? Seen it all since came on this planet in 1952. So it's been a long time, seen a lot of different changes, and hopefully the pendulum swings back to more normal, whatever normal is, and off we go. So thanks again for listening, and I am back every night. I'm back nightly. Somebody's asking a question, so. Yeah, that's interesting, Harry. I'm just looking at Harry Toe. Yeah, you said that SoFi announced $750 million convertible. That's another one, man. That's a behemoth. That thing's just loaded up with crud inside from the corporate financing part. So listen, folks. I've been around. So I've been involved in companies that they blew up. A brokerage company. I was with a company. It was the largest commodity trader on the planet at the time, 1990, and through some brilliant CFO and the CEO was able to blow up that company big time. We all were walking on the street. Folks that followed us in similar fashion was Refco and then Man Futures, a man out of UK. There's still some subsidiary stuff that's left out of that. But it was same type of strategies. You'd think after the company I was with, which was Stotler & Co., you'd think they would have figured out what not to do from our mistakes. But no, there were two more events that happened. And so the world is constantly shifting, and, banks are constantly failing. All of these things happen. Because a bank failed doesn't mean it's systemic. And, there's just things out there that become fairly obvious. And if it's only people predicting they're happening is one thing. It's another thing, like in 2008 when Bear Stearns failed, it was obvious that everybody had on the same trade. If you watch The Big Short, which I watch probably twice a year because it's just so entertaining, because it was such an interesting time of my life then that just reconnects. And I love Margin Call, too. That's one of my favorites with Kevin Spacey. I love that. That's just really good stuff, but these things happen all the time. And even when they happen, it's not the end of the world, whether the government has bails us out or whatever happens. I was talking to somebody earlier today, and I said, there's no advantage. A lot of folks will hype if, Warren Buffett or Bezos or somebody's selling stock, like, oh my gosh, they must know something. No, they're just raising capital. These people, Bill Gates, we watch him sell stocks forever. And back in the late 90s, they did this big dividend. They figured out because there was a tax benefit of actually getting paid through dividends versus having capital gains. So they did this monster distribution, and it was all for all the big shareholders for the most part. Everybody benefited, but the big guys, Gates and Ballmer and all those guys were the big winners of that deal. Because they got, I think it was a 7% tax rate on the dividends. Forget the number, it might have been 9. But it was huge benefit versus having capital gains. And they cut the stock almost in half, I think, at that time. It was a monster. Some of you may know about that was around, but it was really big. Anyway, I'm done. Thank you so much. Like I said, we're going to attack. I'm going to go after, and we're going to look at good and bad sectors. We're going to be talking about a lot of this stuff. I am going to start bringing in portfolio management and stuff as we go down this trail. You might come here one night, and I'm totally into professor mode, teaching about how to how to manage your portfolios. I say that every night. I kind of brought back a lot of the 2020s little jargon that I used to do. So it's good to be back on. This is my third day back. Is it third day? Yeah. So it's exciting. I'm glad to be back. Like I said, we picked up, I think last I looked, 512 new subscribers. First time I'm getting growth, so maybe something's going to go right here. And we'll go from there. Because I think if you haven't subscribed, do it. If you haven't hit the like, we're still a little bit light on the like button. Hit the like button. There's 146 on right now, but make sure you hit that. And I'm just looking here because there was some pretty good action. Yeah, so I was at 33,600. We're now at 34,490. That's a new high. Hopefully we get up to 50,000 on this next run, and we start to build this channel out, and we'll get more structure as go by. This is kind of a restart, and coming out of all these rants and stuff, I'm going to really come up with some good solid structure that I think you folks will be able to use. And remember, the Substack, you get the daily analysis, the more micro type analysis that I used to do every day. So have a great evening. See you tomorrow night, 6 p.m. Eastern time. So I'll be here on Thursday night. That'll be the final show. So thanks for watching. We'll talk to you real soon. Yeah, go to KendallReport.com/indicators and find out the indicators. I think I pronounced your name right. Yeah, just go there. You should be